Welcome. Hello, everyone. We are the Foundation for the Study of Cycles. My name is Lars von Thienen, and today we have another session for the Cycles TV. So Cycles TV is our weekly slot where we try to go over some current cycles and analyze where we are in some data sets. So thanks for joining. And today we have a guest from the Foundation, which I will right away bring in. So I'm very pleased to have Bill Sarubbi with us today. Bill is a member of the board of the Foundation for the Study of Cycles, so he will support us and being part of driving the cycles now forward. Bill is a long-time supporter of the Foundation anyhow, so much longer than me anyhow. So he's in cycles for, 30 years, fund manager and using cycles in all his analysis. So welcome, Bill. Thanks for having you here today.
Thank you, Lars.
Thanks, Bill. So the reason we thought it might sense to have Bill today also on the show was that on the one hand, I hope you have realized it, we have published the new Cycles magazine. And Bill is the editor of the Cycles magazine. So let's maybe bring in also the screen now for a second on the magazine. Give me a second. So this is our new Cycles journal. And Bill, do you want to say some words on the contents for the first issue?
Oh, yes, I think it's a very good mixture. We have an explanation of George Lindsay's Cultural Cycles. George wrote a daily stock market column for Ernst & Company, I think from 52 up until he died in the 80s. But he also wrote a book called The Other History, which nobody paid attention to. This is how he forecast the beginning of cultural movements. And we also have, from my friend John Casti, author of 16 books on mathematics, his work on social moods. He wrote a book called Mood Matters among his 16. And he explains how emotions and moods drive. It's more of the fundamentals of what cycles are actually describing. And then Professor Theo Modis, my friend up in Switzerland, actually we have two articles from him. The next one will be, in this one, he looks at sunspots in their relation to GDP. And in Q1, we will have another issue. We couldn't fit his second one in here, but it is a mathematical treatment of the Kondratiev wave. What happens when you submit the Kondratiev wave to a dyed-in-the-wool PhD researcher, and what stringent testing doesn't stand up, and you'll see that in the Q1 issue. And then, of course, we have Andy Vancholi, who's another board member, writing about something very timely, pandemic cycles. This pandemic has come in right on cue, past outbreaks. Interesting issue. It's a mixture of different views.
Yeah, thanks, Bill. So if you've not seen the magazine, it's on the cycles.org homepage, and Bill is the main editor now, so who will bring forward this content. Besides that, Bill is also a publisher on the Forbes online magazine. And Bill, you published recently an article about the energy stocks. Before we visit this this chart, and we'll discuss the cycles, can you tell us a little bit about how you use cycles in your analysis?
Oh, as most people, I had a business in NYU. I lived in New York. I went to every stock market event, breakfast, lunch, and what struck me, absence of timing. In other words, left in Texas, we left a presentation about Chevron. Walked outside, my boss said, "Now I know all about Chevron, the company. I have no idea where the stock is." It just struck me. Finally, two from Harvard, lives up north of Boston, and will come to me. But he says to me, "Bill, they're shocking. Nobody is forecasting, and this is absolutely vital." I was an analyst on the buy and sell side of Wall Street. I was a fund manager overseas, and so I started coming up with my own measures. But nobody my day, you took an educated guess.
Yeah.
And
Okay.
there was no basis to the timing. So that's why I got into cycles. I joined the foundation in 72, just as I got out of graduate school.
Yeah. Just working on the audio. So I think we need to increase your audio, but we will try to make your audio better. Yeah, we will try to increase the audio quality while we go. So please keep your comments in the chat. I will monitor this while we continue. Bill, yeah, you recently wrote about the energy sector, and I would propose that we try to visit your presentation you did. Give me a second. So you shared some slide with us, which I would propose that we dive into it. So Bill, feel free to comment on that.
Okay, next page.
Yeah, sure.
Well, energy stocks appear to be getting a long bull market. It may already have hit a low. There have been 8 cycle signals. If you take the XLE, which is the ETF of energy stocks, which actually, the S&P, those group indices run back, they started after World War II, but they kept changing the way they formulate it. And so anyway, what we use now is the XLE ETF. I'd rather have much longer term data that we had in the old days, but we don't. If there have been 8 cycle signals on a monthly basis, according to my software, all 4 buy signals have been accurate and 3 of the 4 sell signals have been profitable. Next slide, please. And the point I'm making here is that the fundamentals, that's the cycle. The fundamentals, to me, look like a bear market bottom. So when does it actually start to rally? Well, here you can see that there is a cycle low coming in, followed by an extended rise, and that is in late November, early December. It appears to have already bottomed because the XLE is up about 4 to 5% as I am speaking. And the driving force is most people think if money goes out of the stock market, out of a sector, it's the end of the world. And no, that's a deflation. The last deflation we had was in the 30s. We've had nothing but inflation. In other words, an excessive increase in the money supply ever since. And when you do that, it's only a question of where that inflated currency is going to go. And in my reports, I've pointed out that the collectible market and the auction and antique markets are going through the roof. And I had dinner at my friend's place in Manhattan. I sat in between an art dealer and a lawyer who collects art. And they were lamenting they cannot believe the prices for what they consider to be inferior artwork. And I said it's got nothing to do with the artwork. It's due to the inferior quality of the Federal Reserve notes that's buying the artwork. In other words, each unit of currency is dropping in value, so therefore prices seem to go up. So when money flows out, I think that we're still in a bull market, at least up through January. If technology, which I ran a technology fund for 8 years, or 9, if it starts to flatten out, its relative strength starts to weaken, and this is what I had predicted way back in August, the money has got to go somewhere else. And I think it's going into energy, what's called a disintermediation. And if you go to the next slide, Lars. Now, major lows are usually marked by bearish news, and I credit Jason Gopfert over at sentimenttrader.com for these valuable clues. The magnitude of the drawdown, or the difference between the energy sector and the S&P, it's unusual for any sector over the past 90 years to suffer a drawdown that was 35% more than the drawdown in the S&P. In other words, it's the underperformance of this sector is absolutely historical. It's the greatest magnitude in history. The current drawdown in energy is 60% more. In other words, it's underperforming. It's 60% worse than the S&P. I've made a lot of money shorting these stocks. It was just a reverse of a bull market. It exceeds the relative losses in tech and financial sectors in their last bear markets. And this stock market is still going up. So the only other time that energy dropped this much, 35% below the S&P, was 82. That was followed by years of outperformance. And if you go to the next slide, we'll run down some of the fundamentals. So companies are cutting employees and have reduced dividends. Active oil rigs have collapsed faster than any time in 30 years. According to Bloomberg data, there have been just over 300 mergers and acquisitions in the oil and gas and oil services industries worldwide over the past 6 months. That's the lowest in 17 years and has only recently begun to stabilize. Energy mergers accounted for 1.3% of all M&A activity on average over the past 6 months, the lowest number in 20 years. Stocks in the sector have fallen so much that they've become incredibly cheap. According to Portfolio 123, out of 663 U.S. listed stocks in the energy sector, 470 of them have a share price under $5. This is down from a peak of nearly 80% in March. No other energy decline in 20 years shows more than 65% of these companies with a share price under $5. In the past, when more than 55% of energy companies were below $5, the returns in the XLE were positive. There are actually 390 stocks that can be purchased at $2 a share. So if we go to the next slide, that is the seasonality of the oil, the commodity, because I have 38 years worth of data for this, and you can see that this histogram is expected annual return. In other words, it is the probability that the stock will go, that the oil will go up or down, multiplied by the return. So it's expected return. In other words, if it's a 50% chance it'll go up 1%, the expected return is 0.5. And as you can see, we're coming into the end game here. And the weakest seasonality is August through November. And as you can see, it gets stronger and stronger until we get to April, May. So seasonally, looking at oil, the commodity, this also could be, it's probably already bottomed and predated the cycle a little bit. So if we look at the next slide, I'm not sure what we have here. Oh yeah, 2 centuries of, I don't know where they got the data from. They're saying that value stocks, look at this, over 200 years, are at an all-time historic low in the last 2 centuries. I don't know how valid the data is, but it makes a point that energy stocks are traditionally considered value stocks. And so we also have this cycle. Now, it is quite fun, Lars, to sit down and think what fundamental could be driving this. We're all going to get out and drive in our cars all over the place as soon as the lockdown is over. You know, what would cause a tremendous bull market? It seems to me that the incoming administration wants us to drive tofu mobiles and have solar power. And so I don't understand what is driving this, but this is what the data says. And the fundamentals are, as I stated, they look like bear market lows. I bought my first stock in 1966 when I was 17. And the cycle points to this time period as a low. So that, and as for individual stocks, I would go with the biggest, best known that are cash flow positive. Do we have a slide after that one? Okay. Okay. I hear you.
Or so on. Yeah, thanks, Bill. So I think I just switched back to the main cycle chart, which more or less shows the conclusion that we are approaching a major low based on cycles and your seasonality analysis, what you just shared with oil. So everything points that at least not only the next month, which you showed from your seasonality, also this long-term cycles chart shows this might be a major low or opportunity to go long in the energy sector, right?
Yes.
Yeah.
Yes.
So thanks for sharing your view. I mean, we will now dig a little bit into the Cycles app, but I think it was great to have you here to have some live analysis also, which you can then share with this group here. Therefore, Bill, I would say thanks for joining this session, and I hope and I'm sure we will now visit more often here to share some cycle findings here in the group.
Okay, you're most welcome. Thank you for having me.
Thanks for having you here, Bill.
Bye-bye.
See you. Bye. Okay, so now, this was just now Bill joining our live session. Please bear with me about the audio. We need to continue to expand on this, but for sure we will get better on this, because this should be kind of live dialogue and some action also here. So yeah, what we should do now next is that we visit a little bit the basic status on some cycles in our Cycles app, as we also do in this weekly session. And as you can think about, one of the main topics I would like to start with you is to check about the energy cycles in the market. So what we will do next is, now let's switch to our Cycles app, and let's start with a fresh chart of the energy sector, but let's start with a fresh chart here. So what I've just opened now is the XLI chart, which is the energy sector, where we have seen just the long-term chart from Bill a second ago, the monthly chart, the seasonality, which Bill just brought in. And this is now the raw data set in our cycle analyzer, which you can see here. And this shows kind of I just need to close that. A basic cycle with a length of 174, cycle with 109. So this is the basic procedure. Trying to bring that up. So this is now the daily analysis. No? Keep in mind, we've seen this long-term analysis from Bill just a second ago. And this is now important. If you do cycle analysis, you can do the overall weekly or monthly cycles, which we have just shared a second ago. And then you can drill down to daily chart to get into a kind of cycles within cycles situation. And this is the energy sector on the daily chart with the current cycle. The reason why I've selected this cycle, maybe to pause here for a second, also for some colleagues or members which are looking on this topic here now, is the importance of Bartle's strength, amplitude, and length. So this is what we always need to repeat for a second here. So once you've seen the cycle analysis, you can see here on the spectrum chart that you need to pick the important cycles which are really important for this cycle here, which have a high Bartle score, which means a green triangle, which have a high strength, which is a big sized triangle, and I'll come from the lengths, the highest length cycle here, which in this case is a length of 174 and the next one of 109. You will see the same data here on the table. So the reason I selected the 174 is because it clearly stands up in the spectrogram. It has a high Bartles and a very good strength score here. And then you can drill down, you can sort it here by Bartles. So this is also the highest Bartles score. And then you can drill down a little bit more into the next important length here, which is the 109 in this case. So then you can activate the 109 and even make this analysis a little bit more detailed here. But it points to what's now important is that you mix this with the longer term forecast we've just seen. So this points also to a low in January or December. But if you've listened to Bill also mentioned that the low maybe has already come in already, so that the low might have been some early here. And now even the daily cycle into March, April suggests now, just from the purely cycle analysis, this upswing here. This is then also in alignment with the seasonality, which Bill just shared on oil, not on the energy in general, but on oil. So you see now a daily cycle coming into alignment with the monthly cycle and with the seasonality, which is quite an important topic if we review the energy sector. Do the long-term analysis, monthly chart, and we can also go to the weekly chart and then dig into the daily chart. So now let's see what the weekly chart. But I see, okay, you had a question about this cycle length here. So just following your chat, selecting the 351. So let's start with this one. Or you're right, you could also select this one here. So this is the 355, and you're correct. Let's check on that to add it here. So this is another peak. The strength is not so high, but we have a good Bartles score. So Bartles is good. The strength compared to the other ones is a little bit lower. That was the main reason I've not selected it. But you're right. you could and should add it into the mix. So this was the situation without this long-term cycle here, or kind of yearly cycle, but you can add it also on top of that. So, and what does it support? Yeah, it even supports. So there we have a cycles within cycles, even on the daily time frame, that even if you activate or use these 3 cycles for this composite here, so that you see the strong upward period from December into March next year. And thanks for asking, and thanks for sharing your comment. The 355 cycle is also appearing in other vehicles, so this makes it important, and that would be a reason to select it here also, not only purely on Bartels strengths. So if you find this cycle length in other asset classes, then it makes it even more important to activate here. And this is how I do it. So you can cross-check single cycles to see if they align on the outcome or if they are in disagreement. Because if these 3 topics or 3 cycles would be in disalignment, you will see the curve flattening out, which is not the case here. So therefore, the daily cycles confirm a positive period from December into March. So this is the daily cycles. And you're right, the 174 is kind of harmonic of the other one. So now we are really getting into cycle analysis. That's cool. But we should add the weekly cycle here also. I think this was a question, and I think this is anyhow important. If you want to analyze a weekly cycle, maybe it's not documented, but if you add the minus W in the dataset ID, this would allow you to open the weekly chart here. So now we have the weekly energy data set here back to 2005. Oh, we can even see what's the maximum here. 2005. So we have 15 years of weekly data now. We can check the spectrum here. What do we see for cycles here? So I think this is the first one which stands up, the 191 cycle length, which is good Bartels and strength. And then maybe this 74, or these 2 smaller ones here, 30, 34, 30, 35. So let's start with the biggest, the 191 cycle here. So can sort it by Bartels, which is not the highest Bartels here in this case. Where's the 100? Hey, where are you? Here, this is the 191. Bartels is good, strength is good. So let's pick this first. So this is the weekly cycle, which you see here also in the past, at least good alignment. And now this is what we are interested in. This is the long-term view on the weekly cycles. So this cycle is bottoming, this summer here, already pointing up, and then upward pointing into, end of 2021, beginning 2022. And if you remember Bill's chart, this is in alignment with the monthly cycle forecast we've seen from Bill just a second ago. So this is now interesting, as we can see now the weekly cycles. And now we could add other shorter cycles here. So just for this example here now, let's go with the, let's sort by strength. So this is how you should do it. Then sort by strength, and you could add this shorter cycles here, where you can see, okay, they level out each other here in this period. So end of 21, even the shorter cycles might come into play and get or will end at least the topping period here. So November 21 might be the ending. But in regards to the long-term view, we have the weekly cycle pointing up. You've seen the daily cycles and you've seen the monthly cycles. And Bill also shared the seasonality on oil here. So these are 3 different views: long-term, short-term, seasonality, which kind of come to the same conclusion here. 30-minute. Yes, 30-minute is interesting, but not integrated into our cycles application right now. So if you want to deal with intraday data, you need to upload it. So you're free to upload any data set into the cycle scanner, but intraday data is not integrated just right out of the box, because anyhow, intraday data is also a little bit more complex analyze cycles on. Yeah, at least for today, I think we are running now 20 minutes as we always plan to. So I would say it's kind of special for today, looking at the energy sector. I hope you liked how we did today analyze of the energy sector with long-term cycles and our cycle scanner, and you see that's all in confirmation. And we will bring in more guests from the foundation to make this even a kind of more dialogue and more session, which makes it more engaging. Bear with us that from a technology we are building up all this kind. Let's just cross-check your questions, or if you would like, if you want, feel free to drop in some questions in the chat, so we can spend 5 minutes, if you like, to go over your questions. Okay, I think mainly you talked about the energy sector. Yeah, I think you liked it, so thanks for your comments. So thumbs up. Recommend this session here to others. So I think we want to make it an engaging session. Thanks for your comments on the even the harmonic and using the longer one. This is what I like to become it. So I really want to engage with you as an audience, so that we do this in a kind of a fashion where I can throw in how we use it, how our board members can explain how to do it. Where you will find the documentation, the data is more based on the Yahoo wrapper. Please go to our website or just drop me a note. In regards to time, I'll review the other topics in our next settings. I mean, the VIX index is also included, but let's close the session for today. Next week is another episode of the Cycles TV, so we have another time and another slot to check your other topics. Thanks for joining, and see you again next week.